Have you ever wondered how one country's financial decision impacts the world? On June 4, 2025, the global stage shook with sudden news from Beijing. China announced a significant change in its financial agreements with the US. This isn't just business as usual, it could change everything. China's potential cancellation of specific US loan agreements raised immediate alarm. Global markets reacted swiftly, showcasing a ripple effect of uncertainty. This wasn't a random event. Financial tensions between the US and China have simmered for years. Trade wars and technology disputes have been on the headlines, but this feels different. Now, let's break down why this matters. The announced changes strike at the very core of global finance. They challenge the dominance of the US dollar. Experts debated the strategy behind China's move. Is it a groundbreaking maneuver or a risky gamble? Over the past decade, the dance between the two largest economies has grown complicated. Initially viewed as an opportunity, China's rise is now seen as a strategic challenge for the US. This financial change isn't just between these two giants, it prompts a worldwide conversation. Imagine the shockwaves, they ripple from Wall Street to Shanghai. Currencies began to fluctuate, and commodity prices shifted rapidly. Investors raced to grasp the implications of China's announcement. Governments worldwide convened urgently, realizing the potential impacts could be vast. In summary, China's financial decision could mark a turning point in global economics. With rising tensions, the delicate balance could tilt into a dangerous confrontation. Understanding these shifts is essential for anyone watching the global economy. Stay informed as events unfold. Please subscribe for updates on this ongoing financial story. Your awareness could shape your future investments and decisions. Concerned about China's expanding global influence, this influence is partly built on its vast financial resources. China lends billions to countries across Asia, Africa, and Latin America. The US aims to counter this growing financial reach. One strategy is to limit China's access to global lending. This means using its influence in international financial institutions. China has not passively accepted US financial pressure. Beijing has developed its own counter strategies. The key part of the strategy is building alternative financial institutions. These institutions can operate outside of US control. The Asian Infrastructure Investment Bank (AIIB) is a prime example. China launched the AIIB in 2016. It was created to fund infrastructure projects across Asia and beyond. The bank now has over 100 member countries. This includes many traditional US allies. The AIIB offers an alternative to the World Bank and IMF. It gives China a powerful platform for financial diplomacy. Beyond the AIIB, China uses other financial tools. It provides large bilateral loans directly to other countries. These loans often finance Belt and Road Initiative. Barry projects. China has also been promoting the use of its currency, the yuan. This is part of a long-term effort to reduce reliance on the US dollar. All these measures strengthen China's financial independence. It is not just about defending against US pressure, it is about proactively shaping a new global financial order, an order where Beijing plays a more central role. The success of these efforts will have profound implications. It could shift the balance of economic power. The world is watching this financial restructuring with keen interest. The escalating financial tensions carry significant risks. Global supply chains could face new disruptions. Financial instability makes trade more expensive and uncertain. Companies are rethinking their supply chain strategies. The COVID-19 pandemic exposed vulnerabilities. Geopolitical rivalries add complexity. Some production could return to home countries. These shifts could impact US economic power beyond the dollar. China's quest for monetary independence. China is actively working to reduce its reliance on the US dollar. This is a long-term strategic goal for Beijing. The dollar's dominance gives the US immense global power. China sees this dependence as a vulnerability. It wants greater control over its own economic destiny, and it seeks to enhance the international status of its currency, the yuan. One key tactic is gradually selling off US Treasury bonds. By reducing these holdings, China lessens its exposure to US financial decisions. This also sends a subtle signal to Washington. However, selling too many bonds too quickly could hurt China.